Hello, and welcome to our channel. Today, we're diving into a topic that intrigues many aspiring traders: Forex versus stocks. Which is better for beginners? If you're standing at this crossroads, you're not alone, and we're here to help guide you through this decision-making process. Firstly, let's break down what these markets are all about. The Forex market is the global marketplace for trading international currencies. Picture this massive, bustling hub of financial activity. It's open 24 hours a day, 5 days a week, thanks to overlapping time zones from Sydney to New York. On the other hand, we have the stock market. This is where you buy and sell shares of companies, trading during specific hours depending on the exchange, like the NYSE from 9:30 a.m. to 4 p.m. Eastern Time. Now let's talk liquidity and accessibility. Forex, given its vast size, offers incredible liquidity, meaning you can enter and exit positions quickly and efficiently. The stock market can be liquid too, especially with large-cap stocks like Apple, but less-known stocks might be harder to trade swiftly. When it comes to leverage, Forex is notorious for offering high leverage, up to 1/500 in some cases. This can amplify your profits but also your losses, so tread carefully. Stocks usually offer lower leverage, which might limit your risk but also your potential gains. Volatility is another key factor. The Forex market is influenced by global macroeconomic events, leading to significant price swings. Stock market volatility can be series-specific. Blue-chip stocks are generally more stable, while penny stocks can be unpredictable. An essential part of trading is continuous learning and networking. Trading becomes more rewarding when you conduct deep research, learn from others, and participate in discussions. This brings me to an important suggestion. If you enjoy our content and find it valuable, please subscribe to our channel. We've cultivated a community of like-minded individuals eager to share insights and grow together in the trading world. Finally, it's crucial to mention that trading isn't devoid of risks. It's risky, and it's something not to dive into with all your money at once. Allocate only a portion of your investment capital that you can afford to lose, and always maintain a diversified portfolio to manage your risk better. Thank you for joining us today as we explored Forex versus stocks for beginners. Remember, the key isn't picking the better market, but the one that aligns with your personal objectives and comfort level. Continual learning and a well-thought-out strategy are your best allies on this journey. Happy trading, and we'll see you in the next video.